Hey, welcome to the Social 333 podcast. I'm your host, Chris Bentley. Today, I got my guest, Kevin Jefferson. Come on and introduce yourself to everybody.
All right. Well, I'm Kevin Jefferson, founder of fmtrades.com and the Cash Flow Culture Club, where we teach entrepreneurs how to trade for cash flow, trade Forex specifically for cash flow in a way that's not complicated or time consuming. So we want to help entrepreneurs, business owners, people who are driven, find a way to potentially build an additional stream of income for themselves without going out and getting a second job, or without more what we call more overhead, more employees, or business related BS, right? So nobody wants to take what comes along with making more money if it causes them more pain. So we're here to help alleviate that pain with teaching you how to trade the currency markets.
Nice. Let's back up a little bit and talk about currency markets, but mostly Forex, because I know that's what you trade is Forex. A lot of people probably watching the show have no idea what a Forex is, or when they probably spell it with a four, or but talk a little bit about Forex and kind of like what it is, and then get into a little bit of like what you do with it.
Okay, good. Great place to start. So Forex is short for what's called foreign currency exchange. So the foreign currency exchange is the system where countries buy and sell each other's currency, or you exchange your money for another country's money when you're traveling, so on and so forth. So essentially, it's you're selling one currency in exchange for another. And so an example that I often use is where most of us who have traveled, we have to exchange our currency for the currency of the country that we're going to visit, right? And so, Canada's been in the news lately, so let's use the Canadian dollar. So if we go to Canada, we're generally going to exchange some of our US dollars for Canadian dollars, and a lot of times that's at the airport, right? So you get an exchange rate at the airport, and basically what the exchange rate is what one currency is considered worth versus another country's currency. So let's say that the dollar is worth $1, and actually one Canadian dollar may be worth $1.50. So that means that the Canadian dollar in that example is worth 50% more than a US dollar. And so what that, don't want to get down the rabbit hole, but that's how you talk about GDP and imports and exports. That's where interest rates and foreign trade and all those things kind of come into play, because of the value of your currency will also, it will influence your balance of GDP, your imports and your exports. But basically, I always say, hey, when you're taking a trip, going to Mexico to maybe a more fun place, you exchange dollars for pesos, and then you exchange your pesos for dollars when you get back. And sometimes they're worth more, sometimes they're worth less, but that's basically what a currency trade is. So you exchange once, and then when you're done with your trip, what we call a round trip or a round turn, you get your dollars back, and you go on with life. So it's really a lot of people don't realize that just like you trade the stock market, where you're trading an equity or something like that, you can do the exact same thing with the currency market, but you have to do it relative to another currency, right? Because you can't exchange dollars for dollars and get, make a trade. You have to exchange dollars for euro or dollars for British pounds or something like that. And so just like a person who's trading or is looking at the markets, you can, look at an Apple stock and say, well, I think that it's going to go up based on X, Y, Z. There are certain things that are happening in the currency market that allow you to see the same thing, that you can chart that information, chart price, and actually make decisions based on that, and try to profit from the differences in price in those two currencies. So, basically, yeah, when you're taking a trip internationally, you've made a currency trade. And then when you come back home, you've completed what's called a round turn or a round trip. That's a lot. I know.
That was a lot, but it's good. And so so I trade stocks. Okay. Right. And so it's not really like everybody knows I do that anyway, but mostly people know I sell real estate, but I do that. And then, so it's pretty similar to that. I mean, you can go online, you create your own account. You have online brokerages that do a lot of the transactions, stuff like that. So, it's not like just something pie out of the sky. It's actually very legal. There's financial scrutiny, different regulations with it that comes along with it. So, I've dealt with it because I have my own security branch and stuff like that. So people that want to open up an account or want to start doing trading, is that something that you can help out with, or is that like something that you kind of like point people in the right direction?
Yeah, I would say that I normally will just maybe list some companies that maybe I've worked with or I know of. As far as currency trading is concerned, I normally would direct people to a website called, I think it's Forex Peace Army, Forex Peace, Peace, Army, ARMY.com. And that's an online, kind of like a Google review of different currency trading companies. So that way you can go and get the consumer's idea of what their experience was and then kind of make your own judgment. I normally don't direct people, but if you have a Schwab account now, Interactive Brokers, basically a lot of the mainstream brokers out there, they offer Forex now because that's how popular it's gotten, right?
Wow.
Just like you can open up a stock account, you can open up a currency account. And the difference really is, it's really leverage. And so, people who have stock accounts a lot of times will get the option, no pun intended, the option to open up an options account. And the difference between a stock account and an options account is that an option is what's called a derivative. And it's not a, big scary word. All it means is that the value of one thing is derived from the value of something else. So that's why options are derivatives, because you don't actually have to own the stock to control shares of the stock. And so with that, the way that it makes sense is that they offer you leverage so that your contracts will be worth more and you can actually make more money because, that's how you kind of win in the game. So the same thing is true in currency trading. They understand that it's a similar game, but, now that more people are involved in it, they've allowed the public to get involved. Back in the day when it kind of really went online in the 70s, you had to be ultra high net worth to participate in currency trading. And there was just a lot more barriers to entry. But technology, volume, people's access to information, people's success, all those things have kind of played into them opening that up. I mean, hey, brokers and all these, the financial Wall Street, all that stuff, it's just like a casino in LA, right? I mean, LV, right? They want, like, if somebody's playing a table game, they're going to open up a table to let you play that game.
Especially if you have a big money stack, they have no problem doing that.
Exactly. Yeah. Their money overrides your time, right? I mean, they got more money than you got time,
right.
So basically now you can open up one at your, normal brokerage, your house. But I don't like to give advice because that kind of leans into my own opinions. But, I've had my own experiences and I've had offshore brokers where I've had great experiences. I've been trading for 17 years. So, trading currency for 17 years. And so I've had great experiences. I've had experiences where I got sent to another broker because one was shutting down and then, several $100,000 just like out there in the wind that you can't get back. I mean, it's been, I've seen the wild, wild west of it. And so I always tell people, the one thing I would maybe offer is, if you're not in the United States, a lot of times you have different regulators. But if you're in the United States, just find you a regulated broker in the U.S. And that gives you a little bit of protection, with the CFTC and all these, acronyms and stuff.
Mm-hmm.
But all these companies, they can help you kind of protect you as an investor because you want to have some type of protection legally. That's the biggest thing is really having a safe place to trade.
Right.
Yeah.
For me, like when I was growing up, and I know like we're roughly the same age. Right. So when I was coming up, like Forex was kind of what cryptocurrency is now. Mm-hmm. Like it's very much like, I guess crypto is more common now, but a couple years ago it was kind of like I knew this guy that knows this girl that knows this other guy, and like I can get some Bitcoin and like on the sly, and like I have somebody in the Philippines that can get me Bitcoin at like a different pricing and stuff like that. And as like time has gone on, it's become more mainstream. That's kind of where Forex, in my opinion, is. So like. Sure. Does crypto and like Forex kind of like mix and match, or is that like totally two different birds?
They're completely different birds. I would say, first and foremost, foreign currency trading, it's directly tied to the global economy. And so you got trillions and trillions of dollars a day that are being exchanged on, institutions, big companies, insurance companies, people who, hedge funds, they have the real assets. And so they're trading with each other. And all we're doing is really kind of piggybacking, on what they've got going on in a larger market. And the big thing about, you talk about variations of crypto versus currency, or cryptocurrencies versus foreign currency or fiat currency, as they, appropriately call it. One of the biggest things is crypto can generally be traded without any type of use case. And so I think that's the biggest thing where, Bitcoin, things like that. If you could actually go buy a house in most like 50 states with Bitcoin, then it would have a use case and it would have kind of an intrinsic value, right?
Right.
If you could buy cars with it or things like that, that takes it from being just a speculative asset to actually being one of intrinsic value and where people call quote unquote stores of value, because you have to have the ability to store value up. That's why gold is so popular, because you can actually hold gold. There's a volume, a certain amount of gold that's out there. You have certain things that affect it from a supply and demand standpoint. But when you're talking about currency, primarily, there are currencies that are tied to companies who are working on technologies and so on and so forth. But that's the equivalent of penny stock.
Right.
There's nothing that's been proven with that. But people try to put that label on things like Bitcoin and Ethereum, but really all they are is speculative tools. And so if one group of people, the majority think is going to go up and the minority think it's going to go down, the majority wins. And then when it gets to a certain point, the majority becomes the seller and it goes back and forth. And so you'll see it kind of ebb and flow based on the confidence that people are putting in it, but there's no intrinsic value. So at some point you have to sell crypto for it to be of value to you, right. And so that's the biggest thing. Currency, you can exchange it all day long, but you can be using it, real time. So that's really one of the biggest differences. So in essence, when you talk about levels of safety, so people are kind of, they're familiar with a dollar in and of itself. Intrinsically, a dollar in my pocket, I feel safe, right? People with cash. And then you talk about government securities, treasuries, things like that. Those are more, safer. And then you go to equities, which are less safe because there's more upside and there's obviously downside. And then you get to foreign currency, which it doesn't have to be really any more risky than a stock per se, but because you have leverage, that's one of the things that makes it risky. So people go into trading with what I call a gambler's mentality, being very impatient. And so what happens is they take large risks where they don't have to, and then they blow their account. And we've all done it because it's kind of part of the game that you learn and earn, right? I mean, everybody right. wants to go for it. But when it's all said and done, once you kind of get a strategy and an approach, it doesn't have to be any more dangerous than trading stocks. But cryptocurrency, it's dangerous for a lot of reasons, because you have only a certain number of brokers who are making the transactions. Is going into kind of like a black hole, and right. And you don't really know what's on the other side of that, and so there's just so many things that just haven't been worked out with it, that it's not about just the risk of it going up and down. There are inherent risks from a regulatory standpoint, from technology standpoints, all those things that people don't think about. We kind of get locked into one type of risk, which is the risk of winning or losing on the price. But there's so much more that makes it risky, and so I think that if a lot of people should be really, really careful about crypto. I know there's a big upside and everybody wants to not miss out on the next big thing. And I respect that. But just like any good business, like, Chris, any good business, at some point, the owner of that business, i.e. the owner of that crypto or stock or whatever, has to be thinking about an exit strategy, And so if you're not thinking about an exit strategy with Bitcoin or crypto, you're already behind.
Right.
So that's they're different, but that's what I kind of offered, to somebody who's thinking about getting into it.
Cool, because we were kind of talking about earlier, but like prop companies and like the stuff that you were talking about earlier, where like just companies would just disappear.
Yeah.
Overnight, like with Forex. The last interview that I was on, the host, he lost like $500,000 because he was just like, the company the brokerage just disappeared, the prop company disappeared.
Right.
So like talk about not so much like, I know the stuff that you do is good, like because you keep people's money like secure. But like talk about like if somebody were to do it like on their own, like what kind of, not only like the learning curve, because there's no similar to the stocks or options or anything really like equities based or stock market based. But talk about like what could happen if that company like went out of business, or no different from like kind of crypto was when it first started, where like the wallet disappears or like you lost your pass key or something like that. Like talk a little bit about like the downside of it.
Sure. That's a great place to start. I always talk to my students when I'm teaching them and training them. Everybody talks about, you see online people with all the, these cars and doing all this different stuff. And I always say, the best thing you can do is concern yourself with the downside, because the upside will ultimately take care of itself if you do that. And so the first downside is really just getting with a reputable broker. And so, like I say, if you've got, an account with a company that is, FINRA regulated, they're normally a member of the SEC if they have over 100 million in assets, and they have clients all over the country, over the world, they're going to have certain types of registrations. So your Fidelities, your Schwabs, companies like that, they will pretty much walk the line because they have a lot at risk. You have companies that are specifically Forex oriented, like, I'll say a couple of names of U.S. regulated brokers, Oanda, Tasty FX, which is, part of Tasty Trades, and they do equities as well. What you want to do is just basically research companies that are regulated in the U.S. And if you're in the U.S., if you're not in the U.S., you find your country's regulator. But what that does is anybody who's agreeing to be regulated, they're basically agreeing to abide by a certain set of rules. And then there are certain protections with that. You don't get SIPC like protection like you would with an equity, but they're operating under the guise of, you may lose your money trading, but you're not going to lose your money just by having an account with us, right? So there's certain just ethical things that they're going to do. So I always just say, hey, look for a registered broker. People want to go offshore because, why do people want to go offshore, Kevin? A lot of times people want to go offshore because there's higher leverage, like we were talking about. So, in the US, you have 1 to 50 leverage, which is basically a dollar can operate like as much as $50, which is still pretty significant. But before the Dodd-Frank Act came into play back in, I think it was 2010 or something like that, 2009, right after the economic collapse, they took the leverage from where at one point you could have it as much as 1 to 100 or 1 to 200 leverage, I think, in the US, which basically means that you have to do less work for your trade to work out in your favor. And so that once they decreased that leverage and people were used to 4 times or 2 times as much leverage, they wanted to go to what we call unregulated brokers who are overseas who would give you that leverage. But the risk and the trade-off is the banking system that you're sending the money to. A lot of times these companies will be in, very obscure places, places that I learned about just by way of knowing about these St. Vincent and Grenadines and things like that, So it's not that there's not money there, but who banks in St. Vincent and Grenadine, And so you start to get away, like you start to add geographical risk by leaving the United States in exchange for a higher rate of return or a higher potential, outcome. And so just staying with a regulated broker kind of helps you. Another thing is really getting mentorship if you're trading, because what a mentor can do is help you be aware of some of the things that you may not see that are blind spots. But what a mentor cannot do is force you to take their advice. But because they've seen a lot of scenarios, i.e. myself, what part of my program is mentorship, for the do-it-yourself trader. What I share with them are ideas and lessons that I can offer before they get too far down the rabbit hole, right? Because, that's kind of like going to school. You can do an experiment in lab, in science class, and the instructor pretty much knows what the risks are with that experience. But if you're out there doing it on your own, you don't know what the risks are. And so I have actually one of my friends who, he's an entrepreneur. He owns several businesses, but he got into options trading. And so we were, having lunch, and
that's next for me.
Yeah, I mean, I'm into it too. Actually, a friend of mine shared some information on the course, and I'm like, okay, some of this stuff. I mean, that's the thing. Like a lot of it, the technical analysis is very much the same.
Right.
It's about the language. It's about what is a point or a pip or whatever it is in that game, and so you know how much it's worth. And
exit strategy.
Absolutely, and just knowing how to get out, and how do you make money in it, right? That's really the game. But he had started trading options, and and he was like, it got up to this point, and then it went against me. So I got out. Because I was afraid I was going to lose the money, and then I lost the trade, and so I added to another trade and start revenge trading, as we call it. And then he was like, man, if I just left it, I had made all this money in the morning, if I just stayed there. I got greedy and I wanted to make more money, and so I lost all the money I made, and so when you talk about mentorship, one of the safety nets is having somebody who's kind of been there and done that, and that kind of goes across asset class. But just really the biggest thing that I find that most people, why they fail, is not about understanding how to trade or how to whether it's options, Forex, stocks, whatever. It's really self-management, and I always tell people one of the biggest gifts that Forex gave to me was really teaching me about myself, because I learned so much about who I am as a person. I learned about my temperament, how much patience I have, how greedy I am,
emotions.
Absolutely. How do I deal with certain levels of trauma, or what trauma in my life has actually affected my trading, all that stuff, so it's really been kind of like a psychotherapy session for me, more than anything. It's like, it's taught me a lot about myself. And so I tell people that the money in my school community, I was just talking to one of my members, and I was sharing with him that I'm grateful that he was leading with the process of learning how to trade and the process of risk management and the process of going, slow and having achievable goals, more so than talking about the money, because the money is a byproduct of you following your process, and that's the biggest thing that, trading is so different than a 9-to-5 job, because not only is the income potential greater, in a lot of senses, depending on how much you have in resources, but the other part is it's one of those professions that actually pays you more to do less, and so the less you're involved in the markets are, the less you're trading, the less the less risk you're taking over time, that builds up into, something that's significant. But so many of us are used to going to work, and you have to be at your desk doing something for 8 hours, 10 hours a day. And so like when you're sitting here at the trading desk, and there's nothing happening, or there's no trade set up, so the market's not showing you what you want to see, it's very difficult for a person to walk away day after day, and maybe a couple of weeks, over December to January, the market was really kind of slow in Forex because I think they were waiting for the election and things like that. And so there was very little volatility, if you will. And so I remember I had pretty much a month had gone by from December to January, to where I was in one trade that I'd been in for a month, and I had maybe taken 2 trades over the course of the month. But process wise, I'm like, hey, the market's not showing me what it is that I want to see. And so I have to just step back and trust that there will be an opportunity. Don't fear missing out on a trade. And so, all those things that are human characteristics, that we say, hey, well, Jefferson, you sitting at you're sitting at the market for 30 days and you haven't taken a trade. It's like, okay, yes, sir. Let me take a trade, because that shows that I'm being a good soldier, but right. The best soldier is the one who's a general that sees the battlefield and says, I'm going to operate and I'm going to exercise what I call tactical patience. The more tactical patience that you have as a trader, the better chance you have of surviving, because it's very brutal. It's very dangerous, man. You get out there in the battlefield, on the trading battlefield, and it's a whole lot that could happen, so.
There's a lot of people also with bigger chip counts than you.
Absolutely.
So, they're manipulating markets or doing different things. People have insider knowledge, which, obviously us on the computer side, we're like, oh yeah, that doesn't exist. But no, there's like a lot of that stuff.
It's real.
So, you get, I'm on the more of the stock side, so it's like, you get institutions getting involved, like Goldman, I won't even say different names, but let's say a large institution wants to short your particular stock, and you have no idea what's going on. You just wake up in the morning and you're down, and then you don't have the discipline to just hang in there or buy more, or whatever the situation is, and then all of a sudden now or cut your losses.
Right.
Now you're in a bad spot, then you get into the whole cycle like you were talking about. I've looked into Forex a lot, thanks to you, and I've looked into it a lot. There's all kinds of stuff.
Yeah.
There's just a ton. It's because it's been around a while.
Sure.
And people have made money off of it. There's algorithms. There's bots. I've seen people do like 5 to 8% with some bot, and you're able to put it onto your screen, and it does it automatically, but you got to keep your computer up. And there's people in Europe, and I guess in the US too, that just sit there and just have rooms just full of laptops just running all day with these bots and algorithms. If somebody's just wants to trade, either full-time, part-time, either want to do an algorithm or a bot, anything like that, what is it that you recommend?
I would say first thing is to, just like anything else, go out and invest in an education in the market. Right. Understand what it is that you're involving yourself in first and foremost, really just learn it. And there are free websites in trading in Forex. There's a site called babypips.com. And as far as last time I checked, it was free. Probably one of the best free websites. I continue to talk about it. Babypips, BABYPIPS.com, because they give you from preschool, literally they have it like a school. They have from preschool all the way through getting your graduate degree. And so as simple or as complex as you want to get into learning how to trade, they have it laid out. And so the first thing is to educate yourself. And then I would say if you have a process that you've kind of created, let's say you're further along as a trader, because I don't want to, pretend that everybody may be at the same level. Maybe you've been trading and then you're not finding consistency, or maybe you found a system that you say, hey, I don't have time to really learn how to trade, so I need to put some of these things in place, or I want to test some theories. I would say that if you're going to buy somebody's bot or buy somebody's program, because people sell bots and things like that, just take a small amount of resources and then and let it be an amount that you're okay with, like it going completely to zero, first and foremost. But then secondly, let it be an amount, to your point, Chris, about chip count. Make sure that you got a stack of chips that can really last. Potentially, you can break it out and say, okay, I'm going to give this 12 months to work, right? Because there's different cycles in the market. You don't know where you are in the market cycle. And so you want to have enough longevity to where you can actually let this thing play out over 12 months if it works out that way, and not be in a situation to where you need to get the money out to pay your rent or your mortgage. And so like that, this is definitely what I call on the financial hierarchy of needs. This is the self-actualization phase, right? This is where I've covered my insurance costs. I've got my finances in order. I'm investing with a regular, financial advisor, and I've got my main thing is kind of in order. My house is in order. But at the top of the pyramid, one of the things that I've seen is a lot of people still want to kind of scratch that itch, that risk itch. And so you're talking top of the pyramid money here. You're not talking about your grocery money.
Right.
And so with just doing that, a lot of bots I found, they work for a little bit of time and then they run into some type of market scenario, whether the market's either going sideways or is doing something that the bot wasn't built for, and then it has fits. I mean, to a person, people have said that. So I would say if you're writing your own algorithms, just test it slow, low, easy. I can't overstate enough how important it is for you to just take it slow, and take low amounts of risk. When I was coming up as a trader, I was the kind that I needed to have money in the market for it to make sense for me. And so I would trade on live accounts. And I mean, that it did make sure that I had an Ivy League education, i.e. how much I gave to the markets learning, but the lessons stuck different. You know what I mean? It's right. Like, and I'm all for paper trading because I'm trying an idea or a theory or something. I want to have something that I can kind of throw out there, in the lab. But concurrent to that, even if I'm making mistakes, if I was failing, I wanted to be live because I would be more considerate of the way that I took those trades. And so I would say that, for me, I'm what's called a discretionary trader. So I literally set my trades up. I'm not always manually like taking the trade live, but I'll set up parameters, what are called pending orders, right? So if I, have certain price points, I can set the market there and not be there when it executes. But that's about as far as I go with automated trading, because I believe that everybody goes to institutions that they're like, okay, I know that these guys aren't sitting around, putting all these trades in all day. Yeah, but what they're doing is they're communicating, and to your point, they're not trading the same way we're trading.
Right.
So they're having conversations with their clients like you and I are having conversations and saying, I want to buy Australian dollars for this much. And they're negotiating prices, even if it's through computer, they're negotiating with each other because they are the makers of the markets. They have the money. And so what we're doing is retail traders is trying to discern where the big money got in and trying to catch that wave. We're the bird on the elephant's back, right?
Right.
And so don't think that because you have a system that's working under certain conditions, that it's going to work all times, because you don't know what's happening behind the scenes. And so I'm like, hey, if you want to use automation, use the automation of what's already there. Pending orders, buy stops, sell limits, buy limits, whatever they are. That's enough to make, plenty of money in the markets. I don't think you have to spend a lot of money on tech in that way. That's just my personal opinion. I'm an old man, I'm over 50 now. And so maybe I'm the dude that's saying, get off my digital lawn. I don't know.
I think, on like a whole separate thing, like I think a lot of people, when they get into any sort of trading, whatever it is, I think they kind of think that it's just staring at a screen from 8 o'clock to 5 o'clock or whenever market close. Right. And then like they put down their laptop, they're like, ooh, put down their glasses and they're like, I'm done for the day. And like, I mean, for me, I'll ask your experience, but for me, I'm usually like, I wake up, I look at the market, pre-market, and then I look at the news because everything's really derived off of the news.
Sure.
And then, or press releases, right? And then off of that, then I'll say to myself, or earnings.
Right.
And then I'll say to myself, okay, well, I'm going to have a game plan. And then by 10:30, 11 o'clock, I'm pretty much done. Like,
right.
I'm going to my appointments. I got other stuff to do, and then like, that's pretty much my optimum. And like, I think you're kind of the same way, right?
Right. For sure.
Yeah.
Yeah, so I'm actually grateful that you brought that point up. So a lot of people believe, and I think that one of the barriers, the mental barriers to entry that people have put in place is that you have to be sitting at your computer for 8. I mean, just going back to the same thought I was saying earlier, you think that you got to be at your desk for 8 to 10 hours a day doing something for the market to pay you. And that's the worst place to be. I tell people when I was trading early on in my trading career, one of the worst things that would happen for me is if I'm sitting at a computer and I'm still there, like start at 8 o'clock or 2 o'clock in the morning, and I'm still there 4 o'clock in the afternoon, something probably went really wrong, because I'm sitting there waiting on something to go right, you know? And so, but that's more tiring than if I had run a marathon, because mentally it wears you out. And so I always share with people who want to get into trading or curious about how to evolve their trading. I'm more of what's called a swing trader, and I'm kind of moving more to what's called a position trader, where I'm taking trades and letting them run a lot longer over the course of a year or whatnot. I think that most people, when they get introduced to trading, they get introduced to it kind of in a casino mindset. And so they're coming in, they want to be day traders, stock jockeys, and people who want to, 8 to 4, they want to be at the charts and trading in and out and scalping and doing all this different stuff. And I feel that there are people who scalp and they intraday trade and they make plenty of money. And so it's not an indictment on them. But for the person who wants to come in and learn, I think the easiest way to get involved is to operate as what I am, kind of more like what's called a swing trader. So my trades last 12 or 13 days on average at a time. So I get into a position. I normally don't take more than 5, 6, maybe 7 positions max at a time. And I have a certain level of risk on each of those, like total. And I just let them play out. And I take them on what are called higher time frames. So a time frame is just basically how much data is in, people know about those candlesticks in the market. Right. A candlestick is just basically, it's like a vial of data. And so if you're on the 15-minute candlestick, that's 15 minutes worth of data. That's like the breaking news at the bottom of your screen on CNN, right? So it's like, okay, yeah, you may have been first, but you're probably not right, you know? And so, but when you're on the 4 hour and the daily and higher, there's a 4 hours worth of data or a day's worth of data. And so that's more reliable. So you're not the first to break the news, but the news is more accurate. And so using that as an approach, using more of the higher time frames, you actually have more time to study the markets, to kind of see if what you think is happening is actually really happening and you're not tricking yourself. And then you can take a trade and literally walk away from it and let it play out, and you can go on about your life. So to your point, myself, I used to be a London session trader, which was, up at 2 o'clock in the morning or whatever. And that was fun for a while, but now I got a wife and kids. And so like, that ain't how I'm getting down. But I'm 8:30 to 10:30, like 2 hours a day is really when I'm locked in on the markets, and then after that, I may have some charts marked up. I have alerts set. And so if my alerts trigger, I'll go back and check the charts. But technology says that you should not be at your computer all day. Right. Like, and with a computer in your pocket, you definitely shouldn't be at, I'm not saying trade from your phone, but I'm saying you can check your stuff from your phone. And so, so if you're at your desk all day, you completely, I can say with a certainty, you're doing it wrong. Right. So no, I agree. Yeah. And that's the whole point of doing this, right? If you want to work from anywhere, whatever your work is, I use that as euphemism to say, really, I want to play from anywhere. You know what I mean? So like, I want to, why am I working? Why am I on a beach in Cabo or a beach, St. Lucia or whatever, and really working? Like, no, I mean, I'm checking my stuff. I'm doing my thing. I'm living my life. And then that's kind of a secondary thing. So I totally agree with you. It's no different. Like, trade less, make more. Right. I should put that on a t-shirt. Yeah.
Somebody told me about like being like a retired trader and having that mentality of like, I could take it or leave it. Yeah. Like, that's kind of the way that I made most of my money. It's just by doing that.
I agree with that. While you say that, one of the things, it really is how you show up, right? I mean, think about any professional athlete, whether it's Deion Sanders, people talk about how arrogant they thought he was, but he definitely operated with a level of confidence. And so as a trader, you kind of have to do the same thing, in my opinion. You have to come to the markets and really be the buyer and not the seller. Like, you shouldn't be selling the markets or selling yourself on why you should get into a trade. Right. You should let the market convince you as to why you want to disperse your resources on a trade. Right. And so if you hold that disposition that says, I need you to convince me why I want to invest in this trade, almost like an angel investor or a venture capitalist, right? Or a private equity person. It's like, tell me what's so good about this setup that makes me want to put some of my resources at risk. And when you do that, it seems kind of counterintuitive, but it forces you to continue to operate within your parameters. And so, yeah, you'll miss out on trades. You'll see some setups go places and you're like, man, that thing went up. It's not about it going up. It's not even about you making or losing money. It's about you finding a process that's repeatable, that over time, the edge that you have in that process, just like in poker or any other, anything that's, betting related, your edge is what takes you there over time, but you don't have your edge, every hand, that's like in poker, you're not playing every hand, so that if you understand that if you have a true edge, you tend to not fear missing out as much. And that actually helps you be more profitable.
No, I agree.
Yeah.
Let's talk about celebrities or stuff that you've seen. I follow a lot of gurus. I mean, that's kind of like how I started my career more like, my mom used to trade stocks, so I had like the paper and I read it, and people really don't understand that now.
Yeah.
And it's like I had to call somebody and be like, hey, let me get 25 shares of GE.
I remember that.
Like, I don't know what price I'd get, because I'm going off of like old news, and then the price, I just get a price and like I have no idea. Now it's a lot different, but talk about like, for me, when I look at celebrities and they usually are selling like some sort of program or they're just kind of like showing off and flexing, which is cool. Like everybody's got their thing. Yeah. Thanks to Instagram, right? But like I've seen it all. Like I've seen the exotic cars, I've seen the trips, I've seen, the yachts, I've seen it all. And, kudos to them. I don't know what goes on in the background. Some people just make all their money off of just
selling it or
like stock tips and stuff like that. Tell me about like what you've seen, like some of the crazy stuff you've seen.
Man, I would say, well, the craziest thing I saw was when Tom Brady was pitching crypto.
Wow.
You know what I mean? Yeah. Literally, we had people on TV saying, because that speaks to how you can convince people about a concept, and so they'll go with the concept and not understand what's behind it. And then, next thing you know, you got a whole bunch of issues that you didn't sign up for. For me, I think as far as people I've worked with, a lot of my what we call celebrity clients, they were super busy, and very few of them were very flashy, at least as it related to their investment stuff. Right. So like, unless they had given me permission or we had taken a photo or done something, like nobody would know that I was working with them. And I kind of prefer it that way also. But a lot of times they're just leveraging me, like I'm a piece of their puzzle, right? And so they're like, hey, I don't have time to learn how to trade. I know that you're here. I'm sure I could pay you enough to keep you here personally to teach me, but it's so much cheaper for me to just pay you a certain amount of money and watch that part of what I've got going on and just keep it moving, And I'm not a finance advisor, so I know the powers that be, I'm not advising them, but they will look over my shoulder and copy what I'm doing, and there's ways to do that in a technologically sound way. And so, I would say most of them are into. They're in the same stuff that we're in, they're real estate, they're in the equities, they're always buying more stuff. And I think Forex got them, most of my celebrity relationships I have always been a personal introduction. So the trust level was already there. And so that's what allowed them to get into something as crazy as crazy as Forex. I'll say crazy as Forex,
right.
So, but no, man, most, I always say that a lot of times when I see people pitching stuff online, it makes me a little nervous. I ain't gonna lie, because it normally you think about your business, and I mean, not even the stock stuff. Like, I mean, that's when you like your little hidden superpowers that you have, to people. But people know you for real estate,
right? And
so you think about how challenging it is to become a successful real estate, professional, and the energy and the time and the failures that have to go into, you becoming who you are. And then saying that somebody who doesn't do that at all says, well, this is the best thing I've ever seen in my life. I mean, there's people out there who, like I said, shall remain nameless, who are probably pitching stuff that they have never seen in their own personal lives. Mm-hmm. And so I just say, hey, be mindful. The internet is like a vast sea forgive the expression, of bullshit. Right. And so just be mindful. Put a wetsuit on if you're gonna get out there in that sea of BS, so.
Yeah, definitely. And you offer different things now, right? Like You offer schooling, counseling, like talk a little bit about what you offer.
Sure. So I would say my two, well, there's kind of a three-legged stool, right? And so I have a community through an app called School. And most people know now Alex Hormozy or whatever, the guy who's, made millions of dollars, started with Gym Launch. And but I was actually a student of Sam Ovens, the guy who created the tech for school, the School app, because he was a very, very, very intelligent guy who learned like the ins and outs of marketing. So I was leveraging his course to sell my course at a certain point in time. And so he gave me a free School account like years ago, and I didn't know what to do with it. So when Hormozy and Sam Ovens joined together, Hormozy's popularity made School, School is like the new Mighty Networks app. And so I launched a community on there because I had it already. And I was like, well, why not let this be a low cost entry to allow people to learn about trading? And so I started a school community where you can come in and learn. You can start for free. And I literally teach you A to Z how to be a do-it-yourself trader in a very simple and non-time consuming way. But I know that there are people who are serious. There's a couple of things that they want to do. They want to get mentorship. And so that's my mainstream vertical. We're offering mentorship or what we call trade mirroring, where you can actually trade, copy the trades from your account, from my account to your account. So when I'm taking a position, you can automatically take the same position and kind of piggyback off of my knowledge. So we've got the free community where it starts off for free, like, it's like a 7-day free trial, and then it's like $10 a year or something like that. It's not even expensive. And the reason I did that, before I get into the other stuff, I realized that learning and schooling and online courses started to become commoditized. So when I started in 2017, 2018, shortly after my dad passed. It was still kind of more of a unique thing. And so I was doing what was called Forex for Dads, which I was teaching dads how to trade so they didn't have to get a second job. It was really cool. And that was probably the biggest sense of community that I had when I was in that vein. And then when I expanded it to kind of the layperson, it kind of lost some of that flavor and that sexiness. And I realized that it's very much more of a commodity than it was. And so I want people to get in because I know there are enough barriers to their success already to say, okay, if you're serious about learning it, I'm going to offer it to you at a price point that you got to be like, you can't be serious if you won't do that. Right. And so now if you show that level of seriousness about the process, literally you have the whole thing. I'm not upselling you on like more doors to be open by paying more money. Like literally my course that people have bought for several $1,000s, you get the same information. And so if you're serious, you can go to the next level where I mentor you, and that's a different price, obviously, or where I mentor you and you can copy my trades. Cool. And so, so it's kind of echelons to a person's really their desire to be involved. It's kind of how I operate. But yeah, the Cash Flow Culture Club on the school app, that's kind of the easiest way to find me.
That's the easiest way? Okay, cool.
Yeah.
Well, cool.
Yeah, thanks for asking.
No problem. Well, Kevin, thanks for coming on the show. Appreciate you coming on. And
my pleasure.
Yeah, it was great.
Yeah, man.
So we'll see you next time.
Yeah, we got to have a Pepsi and talk more about equities.
Oh, absolutely. I'll sit here all day talking about stocks.
Right on, man.
Cool.
Thanks,
well, thank you.
Appreciate you.
Yeah, take care.
Bless.